Hello and what is going on, lovely people of the internet? It is Hootmoney here with another video for you guys today. Today we're going to be talking about the Federal Reserve meeting, what we expect for it, what is to come with it, and I'm also got a curveball for you guys talking about options expiration, because there is a bunch of options expiring on Friday and the most amount of put options expiring that we have seen all year. Markets are bearish right now, guys. Cryptocurrency, stock market, you name it, things are not looking great. And we actually did almost touch new all-time highs, but I mean, individual stocks are just tanking right now. If you look at something like AMC, it's down to in the 20s right now from being in the 40s pretty much all of 2021. I mean, not all of 2021, but the second half of 2021, it's been pretty much $40 per share and above. So for it to be in the 20s is a pretty big deal, right? So what we expect from the Federal Reserve, we expect Daddy J Powell to come up there on his microphone like the big confident man and say, hey, we're lifting this thing up. SPY goes high. We're going to the moon, baby. Now, in all seriousness, they expect him to raise interest rates and cut back on bond purchases. By raising interest rates, that takes money out of the economy, which in theory helps prevent inflation. By tapering their asset purchases, it does not necessarily take money out of the economy, but it slows the amount of injections that the Federal Reserve does to the economy. So what it's called is quantitative easing, and they've been doing it since the financial crisis in 2008. And they upped it up. They did QE infinity during the coronavirus pandemic, which essentially allowed the Federal Reserve to purchase as many of these bonds, as many of these mortgage-backed securities as possible. So they're going to be slowing down on that because of the inflationary pressures that we have been seeing due to these monetary policies. So this is going to be a confusing video about monetary policy, and we're also going to be throwing in some options. So it's going to be a fun video, very technical, a lot to think of. But in my personal opinion, to keep it short and sweet, TLDR, I think markets go up from this. I'm going to be 100% honest. It is looking extremely bullish going into the Federal Reserve, and we're going to be touching on exactly why I think this in this video. I know everyone's bearish right now. I know everyone and their brother, even grandma, is bearish right now. Grandma doesn't get it. Grandma needs to be scooping up these deals while they're there. But grandma is selling, realizing a loss in her stocks that she bought the top of because they decided to dump on her. But anyways, that's regardless of the point. Let's just get right into it. So here's the SPY. It came down today, mostly because of PPI numbers, so producer price index. It's been coming down because of the CPI. CPI was also at a very high level. So SPY's been coming down, right? And there's been a lot more uncertainty in the marketplace, right? And because of this, markets don't like uncertainty. The market cares more about the fact that they haven't heard Daddy J Powell say that he's raising interest rates than Daddy J Powell actually saying it himself. So when Daddy J Powell comes around and he says that they're going to be raising interest rates, they're going to be slowing down their bond purchases, markets are going to have certainty. They're going to be like, oh, we already expected him to do this, right? And now that we know for sure, we can keep chugging along, right? So first and foremost, that is exactly why I am bullish. But there's also a little curveball that we're going to get into in terms of options expiration, specifically put options, which we don't deal with too often because a lot of the times, I mean, especially over the past 2 years, it's been call options that have been getting all the glory. But recently we've been seeing the most amount of put options being placed all year, expiring on December 17th. So that in and of itself will be a massive catalyst going into Friday. Anyways, guys, if you guys have not already checked out Moomoo, they have the best stock brokerage promotion of any brokerage. You're losing money right now. I get it. We all are. This is how you can get some free money. So you make an account, deposit $1, you get up to $7,000 in free stock. Deposit $2,000, you get a wild card up to $17,500. So it's definitely worth checking out. They also got a Christmas promotion where they're giving away Oculus Quest 2s, iPhone 13 Pros, and shares of GoPros. This ends at the end of December. So again, guys, just check it out if you guys have not already. Tomorrow at 2 p.m., 12:15, we have the FOMC meeting. I will be streaming this, guys. I will be live streaming this meeting. It is going to be fun, and I'll be giving my live reactions to it. So definitely join me for that. We also got a 6.8% increase in the CPI. All right. So since November 2020, CPI is up 6.8%, which is the highest that it's been since 1982. So the Federal Reserve has to react to this. They have to change their policies because this is getting absolutely out of control. I mean, it's pretty obvious. We're paying more money for the same goods and services as we did last year. Now, this is my thought process on the Fed. It's on Twitter. You guys got to follow me at HootmoneyYT. There's a link to my Twitter in the pinned comment section or on my channel page. I genuinely think that if/when the Fed raises interest rates/tapers this week, now keep in mind, guys, everyone is expecting this. Everyone. The entire markets are expecting them to raise interest rate and taper this week. I think that markets will go up. This is because there would then be certainty in the market. Also, a ton of people are shorting/buying puts. Inversing the masses can often work out well. Could be wrong. So here we have market uncertainty and instability. So let's just circle through this real quick. While known factors are already reflected in efficient market prices, the main sources of market instability are unknown factors. Like what we don't know. We don't know what Jerome Powell is going to be saying tomorrow. These unknown factors shall not be referred to as market risk, but market uncertainty. So most people are already expecting the Fed to begin raising interest rates and bringing the asset purchase program to a halt, like I already said. But the Federal Reserve has not yet mentioned it, meaning that there is market uncertainty. But at the same time, people are already expecting the worst. The expectations are pretty much the worst that the Federal Reserve can do for the markets, right? So likely this is already being baked into the SPY. And that's just what I think, right? I could be completely wrong. But since the markets are already preparing for the worst, I really do think that anything that the Fed says, even if they deliver the worst news possible, it won't upset the markets because they're already preparing for the worst. It's already baked in to the markets. All it can really do is give certainty and bring up the markets. So looking at this article right here, it mentions that about $4.3 trillion worth of options are going to be expiring this Friday on 12/17. That's more than the market cap of Apple by almost 1.5 times. They also mentioned that the sharp negative performance of many stocks is drawing out large put volumes, creating a highly concentrated negative gamma into the 12/17 expiration. So just like there is a gamma squeeze, right, to the upside, with a bunch of put options, with heavy volume in put options, there could be a gamma squeeze to the downside because of a negative gamma. So in smooth brain ape terms, essentially means when more people bet that stock go down, stock tends to go down because people are betting that stock goes down. It's a constant cycle. Just like how people are betting that stock go up, then stock tends to go up. They also mentioned that the Fed will likely trigger a release of flows tied to a large amount of very short-dated negative gamma. Which again, guys, this is what we already were talking about. The Fed is going to say, raise interest rate, slow down asset purchasing, which is generally bearish for markets. Then they say that stocks falling further into 12/17 drives that negative put gamma higher, which could lead to large short hedge cover into Christmas. Essentially meaning that once this all dries out after 12/17, markets should in fact recover, since there is a large negative put gamma right now, and that negative put gamma is what is in fact driving down prices. It's a reverse gamma squeeze. It's a put gamma squeeze. So here's an example from 2018 where there also was a bear market, or kind of just a bearish market, going into the end of the year in December. So into options expiration, the market did trend downwards, but right after options expiration, the market rebounded very, very nicely into the end of the year. So essentially what the point here is that many people are betting that things are negative, right? And a lot of this negativity is tied to the 12/17 expiration. So after the 12/17 expiration, negative sentiment could relapse and turn positive. And also if a bullish Fed happens, so if the Fed ends up not raising rates as high as expected, if the Fed ends up not tapering as much as expected, that could cause a ton of covering, which would lead into an insane rally, either after the Fed speaks or after options expire. So I just wanted to look at AMC stock because obviously it's been taking a massive hit. Tons of retail likes this stock. It has a massive negative gamma right now, meaning that people are betting that the stock price will drop. We've got $10,000 in premium or more. We're going to look at the last week of options activity. We're looking at ask side only, so the straight buying of calls and buying of puts. If we look up the charts right here, over the past week, most whales have been betting that AMC goes down. There's been tons and tons of put buying in AMC, bringing on a negative gamma. 80% of the bets in the last week have been bearish. Now, what happens after these options expire on 12/17? Likely that AMC rebounds from it, right? Now, I'm not going to say that what the Federal Reserve has to say is necessarily going to affect AMC, although I do think lower interest rates and less tapering will likely help a stock like AMC. But what I can say is that this is one of the most bearish stocks there is right now. And because it's so bearish, this could mean that there might be a violent rally that comes as a result of it, especially after 12/17. All of these put options do, in fact, expire. So at the end of the day, I'm going to stick to my thesis. I think that there will be certainty in the market once the Federal Reserve and Daddy J. Powell speaks. And I think that will lead to all the people that are shorting / buying puts to essentially get squeezed and cause a huge reversal of just de-hedging and all of that crazy stuff. So I really do think this is bullish going into this week. I don't think the Federal Reserve is going to cause a massive market crash. I am excited, guys, and obviously cryptocurrency would be benefiting from this too, right? Because cryptocurrency is heavily tied to inflation and an inflationary outlook. And once we do get that certainty in the market, cryptocurrency could recover too. Then I'm also looking at stocks like AMC that have extremely bearish flows. A lot of stocks have very bearish options flows right now. And those are the stocks I'm going to be looking at for the sharpest recoveries. So go do your homework. Look at all the stocks that have massive amounts of bearish flows. You can check it out on Unusual Whales yourself. There's a link to Unusual Whales in the description. They even have a bunch of free features. So go there, look, and find out stocks that have very bearish flows, and those ones are likely the ones that will be rebounding the most, especially if the Federal Reserve is more positive than we have expected this week. And then regardless, if the Federal Reserve is not super positive, right, and markets continue to sell off, then after 12/17, there should be a recovery because a lot of these put options are now expiring. So that's all I really got for the video. Hope you guys enjoyed. Drop a like if you guys did. I tried to explain it nice and clear, tried to not make it super confusing. So if I hope you guys can give me a like for that. Subscribe to the channel for more content. Again, we're going to be live streaming the Federal Reserve tomorrow. So that's going to be fun. It's at 2 p.m. Make sure you guys tune in. That's all I really got. Hope you guys enjoyed. Check out Moomoo if you guys like free money. Up to $7,000 in free stock as long as you deposit $1 on their platform. That's all I got, guys. See you guys next time. Peace.